Although Tesla continues to be the most popular electric vehicle manufacturer in the US, this ranking is shifting as new, more expensive options become available. Despite Tesla's competition with other companies, plus their struggle with their stocks, there are still several factors that can lead Tesla to soar to more than 570% in the years to follow. Hey, welcome to Stock Market Mate. Today we'll talk about Ron Barron's prediction about Tesla's stock, which he expects will give investors a 600% return on their investments. Subscribe to the channel and hit that notification bell to help us beat the YouTube algorithm. If you're done with that, then let's get right into it. Some experts believe that there is a strong possibility that the Fed may stop raising interest rates. Market expectations are high, and officials will probably raise them. This time, however, Christopher Waller, the governor of the Federal Reserve, recently stated that if the economic data cooperates, he's willing to scale back the pace of interest rate hikes in the near future. He claims that the data from the previous weeks has given him more comfort and has led him to think about lowering the hike by 50% basis points. The Federal Open Market Committee, which sets interest rates, is rumored to meet in December. Waller has stated that he won't be passing judgment on the anticipated raise until he gets more data, including the upcoming PCE inflation report and the upcoming jobs report. Lael Brainerd, the vice chair of the Federal Reserve, also stated that the recent US inflation report, which indicated slow price increases, gave her hope that the Fed will likely soon scale back the amount of its interest rate increases. She adds that preliminary inflation statistics had been encouraging and that it will likely soon be prudent to switch to a slower pace of rate rises. Could this signal a turning point for Tesla? During Tesla's Q3 results call, Musk stated that the business is expected to conduct a substantial repurchase in the coming year, probably totaling between $5 and $10 billion. He did, however, stress that the Tesla board will make the final decision. While the manufacturer may be seeking board clearance, it's also possible that Tesla is delaying this buyback while it waits for the world economy to improve. Stock prices often fall during a recession, which makes the markets volatile along with the share values having severe mood swings. This adjustment forces investors to react swiftly to any inkling of news, good or bad. Some investors may even withdraw all of their funds from the stock market in an effort to be safe. However, Tesla may be in a far better position to conduct a share buyback if the volatile market scenario is maintained under control. Despite the challenging market, analysis by Ron Barron and Cathie Wood has suggested that Tesla would be in a strong position to thrive. After the stock price of Tesla fell following a poor third-quarter delivery total, a longtime supporter of the firm, Cathie Wood, recently purchased shares of the automaker. Wood's ARK Investment Management's fund bought 132,213 shares of Tesla, the company's first acquisition of the stock since mid-June. Days after the automaker lost its position, ARK Invest purchased Tesla shares. The most recent acquisitions made by ARK Invest and its CEO further support the claim that Woods took advantage of Tesla's present low stock price as a great opportunity to buy. In October, Cathie Wood and her team at ARK Invest said that if Tesla were to create a product that could sell for half the price of its present vehicles, it could tenfold the size of its whole addressable market. During Tesla's third-quarter results call, it was revealed that the company is working on an electric vehicle that would cost around half as much as the Model 3 and Y. Tesla, according to Cathie, is a solution to the current economic crisis. She claims that innovation will aid in resolving the energy crisis and problems with the supply chain. She continues by saying that consumer preference for EVs is only growing. Wood and Ron Barron, CEO of Barron Capital, both hold the view that Tesla shares will eventually become expensive. Having originally purchased a stake in Tesla in 2014, Ron Barron has long been a Tesla bull. The billionaire owns a combined interest in Tesla valued at nearly $4 billion, between Barron's holdings and his clients' holdings at Barron Capital. In a recent interview with CNBC, Barron stated that he anticipates Tesla will provide huge gains that will eventually boost the company's valuation to roughly $4.5 trillion. Barron predicts that in the future, shares of the automaker would increase by more than 570%. He asserts that if Tesla produces 20 million vehicles annually in 2003 and sells its EVs for about $50,000 for each vehicle, he can earn roughly $1 trillion in revenue. While it may seem plausible, Tesla, which is presently valued at roughly $506 billion, would need to increase in value by more than 570% from current levels to meet Barron's target valuation. The primary assumption underlying Barron's bullish valuation is that Tesla would significantly expand its company over the next 10 years and sell around 20 million cars annually. Tesla is on target to sell just over 1 million vehicles this year, and Musk has already declared that the company intends to create 20 million electric vehicles by 2030. Elon Musk is confident in Tesla's future prospects and thinks it has what it takes to overtake Apple as the most valuable company in the world. When Apple was valued at roughly $700 billion, less than what Tesla is currently worth based on its market cap, Musk earlier stated that he believed Tesla might be worth more than Apple. Musk, though, has updated his prediction and now thinks Tesla might be worth significantly more in the future. Not only more than Apple, but also more than Saudi Aramco put together. This comment by Musk values Tesla at $4.5 trillion, suggesting that the ultimate cost value would have to grow from a current $566 billion to $4.4 trillion. This is something that Elon Musk feels is achievable. However, he argues it doesn't guarantee it will happen soon. Apple is currently worth $2.25 trillion. Thus, Tesla would indeed outperform the business in terms of valuation if it can raise its estimate to $4.5 billion. Barron concurs with Musk's assertion that Tesla has the potential to surpass Apple and Saudi Aramco in the future. Barron adds that the bold case he had described in his valuation of Tesla is just based on the revenue contribution of Tesla vehicles and does not include the other aspects of the business, such as things that it's working on, like batteries, FSD tech, and robots. Consequently, his investment has a little margin of safety. Barron added that a lot of advancements from Tesla may be anticipated as Musk believes that robots will eventually be larger than automobiles. Musk has already predicted that the humanoid robot developed by Tesla will one day be the most valuable aspect of the company's operations. The importance of the robot will become clear in the upcoming years. The Tesla CEO said on the first quarter earnings call, "The goal of the Tesla robot is to eliminate hazardous, dull, and repetitive duties by being amiable and navigating around an environment populated by humans." Elon Musk, CEO of Tesla, is still a favorite of Barron's, and he has previously stated that he's not concerned that Musk's recent move to invest in Twitter will be a distraction. He believes that Elon Musk's investment in Toyota is benefiting his entire market strategy and that Musk, the Tesla and Twitter CEO, will continue to concentrate on creating things that matter. Barron has the same positive outlook for SpaceX as he does for Tesla. Barron revealed that he had recently been investing in travel companies as well as healthcare during a prior interview with CNBC. He also said that he has increased his holdings in SpaceX by another $100 million. According to Barron, the value of Tesla stock will be between $500 and $600 in 2025 and between $4.5 trillion in 8 to 10 years. Can Tesla ever achieve this price? Please share your thoughts on Tesla in the comment section below, along with any questions you might have concerning the company's recent activities. Well, that's about it for today's video. If you found this video helpful, kindly click the like and subscribe button. Also, you might want to leave a comment below. We love hearing from you. Thank you for watching, and we'll see you in the next video. If you enjoyed this video, you're going to want to watch one of these two videos right here. Enjoy!